Monday, June 30th, the last day in the quarter. I got a lot for you. I got a joke about a dating reality show. Netflix, if you haven't watched Poop Cruise, it's fantastic. And the last and final season of Squid Games, watch that one. We will go over the top performers in the S&P since we're through the first half of the year. The S&P and the Nasdaq, we're going to go over the top and bottom to see if there are trades. I will go over the majority of the Mag 7. I will also go over what do you do when the market's at an all-time high. Okay? I will go over that. We'll go over Meta, Microsoft, Google. We will go over Taiwan Semi. We'll go over Netflix. We'll go over Tesla, Uber, and all of that stuff. CoreWeave, Palantir, Circle. We'll go over what's happening this week because we've got a shortened week. Got a half trading day on Thursday, and Friday you're off for Independence Day. So what do you do? And then finally, a few trade ideas. Okay, there's one involved around regional banks. We'll go over it. But I want to go over first this TrendSpider Sale. Okay, this TrendSpider Sale, it's Independence Day. It's going on for the next 6 days. And what I want to point out to you is not just that you're saving up to 50% and that you can get like a $7 trial for 14 days. So you hear me talk about this all the time, but stick with me and don't complain about the ads because I want to go over this. Because this sale is not just a sale on a tool, but it's a sale on a training, okay? And I know some people will get this premium. Don't get the standard, get the premium. It's the most popular, okay? And it's the most popular for people who understand technicals. But what I want to point out to you is the advanced tier. Okay, the advanced tier comes with, you'll see at the bottom bullet point, up to 52 training sessions per year. It's $107 a month. That may seem like a lot, but remember, you're getting up to 52. So you're taking one training session per week. I did the math on Friday. Okay, let's break it down. $107 per month for 12 months. That's about 4 training sessions per month with 1 per week. At $107, it assumes you're paying $26.75 for 1 hour of training. Okay, that's one-on-one. That is a Zoom call. Most professional training, golf, tennis, my girlfriend does piano lessons. It's $70 an hour. Okay? And if you just assume that you're paying for the training sessions, the entire TrendSpider tool is free at that point. So if you assume that half this is at $107 and you cut those training sessions down, it's $14 freaking dollars. So if it's within your budget, go for the advanced, because if you're not used to this, you're not only learning technical trading, which is a level up. You'll see me use charts. You'll see me go over this. It is essential for me to use charts in managing my portfolio. You're at all-time highs. Do you want to know not only when to get in, but when to get out? And that's the key. We saw this during February and March. When the algorithms told you to get out, you could have listened to them. It could have been a clear sign to get out and then buy back in April. So you want tools like this. Again, if it's not in your budget, don't think about it. Get the premium, get 2 trainings per year, and 2 trainings, if you already know technical trading, is perfectly fine. So the $52 a month one is perfectly well. And if you don't think that you know this stuff, get the $7 training, which comes with 1 free training. $7 trial for 2 weeks. It comes with a training course. So get it for 2 weeks, sign up for a training course, and see if you like this. That's the sale. So again, I went over the math for you, $26.75 per 1 hour training. You're literally getting the tool for free. So understand that. Now let's go over some of the things that they give you. Here's a strategy that they have built for you that has outperformed the market for 26 years. It doubles the return of QQQ. It's a golden cross strategy. And before you buy TrendSpider, go and watch this video. Go and watch the video. It's Mike telling you exactly what it is. You can see the return, 1,775% versus 936% the asset performance. And they guide you through exactly when to buy and sell. And it's QQQ. Level it up with TQQQ. Go and back test it. It's literally that simple, and they guide you through it. If you are not following TrendSpider, even if you don't have TrendSpider, by the way, go and follow their Twitter. It's amazing. It's super, super simple, and Mike guides you through exactly how to set this strategy up in your TrendSpider. So my newsletter will have it. You can import it. You can watch it. But again, it came out this weekend. And then say you're like, well, I really want to become a trader. I don't want to, I'll use it for long term. I want it short term too. Here's a strategy. The volatility equals opportunity. NVIDIA intraday strategy goes on 15-minute charts. It exits at a 1% loss or by 3 p.m. So it sends you can literally set an alert. Try it on any ticker. You can see their performance, 234% versus 55% buy and hold over the last 18 months. 18 months. So you can easily find strategies that fit your work life and set up alerts so you don't have to sit there and watch charts. It's unbelievable. And say you're just learning about technical trading, this makes it super simple. The moving average trend identifier, it's so easy. I'm going to turn it on right now on my screen for you. Okay? I'm going to turn that on. And look, see the candles turn from red and gray to green? Green means you're in. Gray means you're just holding. And red means you should be out. Again, they make it so easy, and all you have to do is add to TrendSpider. It is an unbelievable tool. So before I go into the markets, I do want to bring something up. Just before I go into things, I want to make sure that you know of a couple of trades that I've gone over, okay? The first, there were tons of winners. We had like 8 winners that were up more than double digits last week that I just brought up and said, hey, you might want to think about this. And we're in a bull market. So typically in a bull market, I kind of have some good ideas. So if you haven't listened to last week's episode, I went over how QQQ seasonally is very strong. And again, I used TrendSpider and I said, hey, we got in at 78.88 right there. Just got you out of a 64% gain in the 4-hour algorithm. Again, if you sign up for the yearly plan with those trainings, you get the 4-hour algorithm. Look at that. Now, this back test, you can see it right down here. For the last 24 months, there have been 24 positions, so 1 per month, and you make 125% versus 100% buy and hold on this one. And we're in a bull market. It just got you in. And I brought up, hey, the next 2 weeks are really good for TQQQ. Where did you want to buy? Last week? Well, what's TQQQ up in pre-market? It's up 1.77%. I brought that one up. Okay, just by using the seasonality. It's never perfect. You're never going to have, oh my God, this is absolutely going to win. But if you add this like an advisor that tells you, hey, this is a good risk reward setup. That's the way you use the charts. Don't forget about the Tesla trade that I brought up last week. This one is down 1%. We've seen the 4-hour algorithm. The 4-hour algorithm just got you out with a nice 0.22%. I brought up a trade idea on my newsletter for that. But go and listen to Friday's episode. Okay, it looks at ETFs that are driving this market. I thought that was probably the best insight that I've given all year. Now, on to the markets. QQQ, we're up 0.6. Again, it's a bull market. Okay? Stocks peaked at all-time highs. All-time highs. And we're peaking in June. This is key. Since 1950, stocks have never peaked in June. Okay, if you look at all the years since 1950, this is the month of the year that it peaked. You have a lot in December. You have a lot in January. This is key. So what does this mean? Okay, it could be the first week of July. We just went over TQQQ. Based on seasonality, could be with first week in July. July has three years where we peaked. It could be that February might have been the peak because we're double topping. If we hit all-time highs, February couldn't have been the peak. So maybe it's going to come in the next few months. Maybe. Because March, April, and May were so weak. If we go and look at the chart and we just go look at a monthly, okay? If we look at this, you can see how March, weak, April, super weak. May wasn't so strong. It was up, 7.3%. That was great, but it wasn't like, oh my God, we're out of the woods. June was strong. June was up 5%. It guaranteed the bull market. Again, it pointed towards the bull market. And like I said, on Friday's show, I went over ETFs with momentum and social leading the way year to date. Go and listen to that show. Subscribe to the newsletter, in fact. If you want to know about Friday's show, you can just go to the newsletter. Go and subscribe to the newsletter. I just went over TrendSpider, okay? If you just subscribe to the newsletter by this Friday, July 4th, if you're a subscriber, you're entered to win a full year of TrendSpider, and not just the dinky standard or premium plan. I am giving away the advanced tier. So there is no reason why you shouldn't subscribe to the newsletter. Again, Fridays was a great episode, so you can go and listen to it. But again, where are we on this one? Stocks rarely peak in June. I predict we will get a high in the next few months. Again, I like it. Now, what are the Nasdaq's 10 best performers and worst performers? Palantir, 83% this year. Zscaler, 75%. I brought up Mercado Libre in February. It's up 49%. Netflix, I hold it. It's up 48%. Micron, it's up 47%. CrowdStrike, I bought the dip on that one. It's 46%. Constellation Energy. Energy is part of AI. DoorDash is up 43%. KLA. Axon Enterprises, which is one of Shai's favorite. So again, those are the 10 best performers. Now, what are the 10 best or worst performers in the QQQ? Well, number one is Trade Desk. And I have brought up Trade Desk before. And Evercore thinks Trade Desk is safe from Amazon's competitive push. Now, I brought this one up before, and the reason I brought this up is because on the 4-hour algorithm, you have an entry here at 71. You're trading at 69. Let's see, in pre-market, you're at 70. It's up 1.4. You've been trading a little sideways. Again, the 4-hour algorithm got you out with a 37% gain. But I like this one to start to hit that gap. If you get to 85, okay, if you get to 75 and we're in this huge bull market because Evercore thinks that it's still strong and it's safe from the competition of Amazon, you start to fill this gap. And that gap is all the way up to 120. Again, using charts for a trade. This isn't an investment. For me, Trading Desk would not be an investment. It would be a trade. But again, it's the worst performing stock in the Nasdaq. So go and take a risk. What are the best performing stocks in the S&P? Well, number one, again, Palantir. Number two, an energy company, NRG. It's 82%. Aerospace, Howmet, 65%. Seagate, Supermicro, which I've written off, is up 60%. I have told you I love GE Vernova. It's up 55%. GE Aerospace up 53%. Newmont, which I own since February and I sold, is up 52%. So I don't own that one anymore. And Uber, which I said was $100 stock and it was trading at 60. It was trading at 60. You could have bought this one at 60. Just back here in December. Now, it dipped down. It didn't dip down a ton back in April, 71. But you're trading at $91 right now. So those are the best performers. Go and find one in this bottom performer that may turn out to be better. Maybe Deckers gets a bid. Maybe Enphase with solar. Maybe it's United Healthcare, which just had a buy in the 4-hour algorithm at what, 310? 308. 308. Has it bottomed out? You take a look at the weekly, and it looks like we're just trading sideways. Maybe that's one of the best ones. Again, that's the number 3 worst performer. But just remember, tariffs are still in the lexicon of this market. So if you want to know something that will bring us down, July 9th is the tariff deadline. And it's still in there. On Friday, Trump said he's cutting off Canada, discussions with Canada, because they had this digital tax that went in. Well, what happened late last night? Canada, Mark Carney said, we're not going to do the digital tax. We're going to continue negotiating. Buy the dip market. And Friday, if you just look at QQQ and we go to a 5-minute chart, okay, and I'm going to do after hours here, and you can see what happened. Trump cut off trade. It was buy the dip. You could have gotten this one for $540. Where are you trading right now? $551. It's not a great move, but again, I say in a bull market, take advantage of a triple leveraged ETF. This one dipped down to 79. Okay, that's a nice 5% move up there. I mean, it's once you regain confirmation and you got up here 3% in what, less than a weekend. I wouldn't have suggested this, but again, risk reward. If it's within your risk tolerance, go ahead and take it. Now, Trump said on Friday over the weekend, he wants 1% interest rates. It's kind of crazy. But what does this market feel like? Okay, let me just put into perspective. If you ever watched a dating show, one of those reality dating shows, and the guys all, one guy goes on a date and goes to the champagne room with the woman, okay? And then he comes back to the house and starts telling everybody else about it. There's always one guy that's in love with this woman from the start. Absolutely. Like, oh my God, this is my wife. They've known each other for like 3 days. And I know I'm going to marry this woman. And I've got to outsmart all of these guys. This guy's always sitting in the background. And he's always sitting there pouting. And he's like, I don't know what I'm going to do, blah, blah, blah. And then the alphas are all taking her out into the champagne, doing what they do in the champagne room. And then they come back and brag about it to the entire house, okay? If you're the guy sitting out in this market, you're that douchebag sitting in the back getting alphaed by all these individual retail traders who are buying Palantir at 120 and they're saying, oh my God, valuation doesn't matter. You're that guy. So what do? Well, we go and look at Bob, A Wealth of Common Sense. I point this out. Bookmark this article. Read it once per quarter. We're at all-time highs. Okay, and you even get a nice visualization if you can't read. Say you can't, go and watch it on YouTube. Okay, the key is Bob bought at the high. Bob bought at the high. And what if he just bought at the high? Bob began his career in 1970 at age 22. He was a diligent saver and planner. His plan was to save $2,000 a year during the 1970s and bump that up by $2,000 each decade until he could retire at 65. Bob had the worst market timing ever. He didn't dollar cost average. He didn't buy every particular time. He just bought at the peaks. Here are the purchase dates, the crashes that followed, and the amount of investment. Subsequent crash. 1972, he lost 48% of his money. August 1987, he lost 34% of his money. He put in $46,000. He had waited that entire time. December 1999, lost 49%. Total invested, $184,000. He still retired a millionaire. What's the lesson? You're gonna make mistakes. You will. Make sure you're biased toward optimism and not pessimism. Long-term thinking has been rewarded in the past. Again, don't be that douchebag that pouts in the back. Bookmark this article. What's working for the economy is the dollar and interest rates. If we just go and look, I've talked about how the VIX, you want to buy the VIX when it's above 20. You want to buy the market when it's above 20. It's at 17 and it's up 4.72%. Ironically, the market's up as well. And then you look at the 10-year bond. You go over here to bonds, and the 10-year bond is down to 4.27. What was it a month ago? 4.47. It's falling. That's really good. And then you've got a Fed that most likely will lower rates. I think that's going to be a sell the news, because when they lower rates, I don't know that that's 100% great for the market. But then you look at DXY. DXY, which is the dollar index, it's gotten weak. And that's good. I went over Friday. 40% of the S&P's earnings are from foreign. So with a weak dollar, it benefits the U.S. companies. So I like it. Again, I like it. Now, if you didn't see this, this was amazing. This is a Tesla, okay? The first delivery of a car manufactured in the factory in Texas and delivered to the customer's house without a salesperson involved. A 30-minute drive. Now, it poses questions. As somebody who's bought a Tesla, I mean, there's scratches, there's dents, there's issues that might need to be fixed. But it's clear Tesla is leading the way by cutting costs out of the car business. It was identified is a failure that I've had happen to me in the full self-driving software. Meanwhile, okay, all these guys who are documenting, by the way, they're screaming, LiDAR and radar is necessary. So then you look, this weekend, my friend was in Atlanta, okay? He recorded a Waymo blocking the entrance to a freeway for over an hour. Over an hour. If you live in Atlanta, you know what these freeways are like. Over an hour. The point, none of these technologies are perfect. They'll get there. They're going to be safer than humans driving. Okay? You can own the stock of all of them. Tesla stock, I gave you a great trade idea on this one. My full thought process on the newsletter. But I also own Uber and Google. And here's an analysis, Uber and Alphabet's Waymo versus the rest. What to buy in the new ride-hailing market. I mean, there's pony stock. There's talk of Travis Kaepernick coming back to Uber to work with them. Now, there's 4 stocks in this realm, okay? There's Tesla. There's Uber. Tesla's not at an all-time high. Uber is. There's Google, which is not at an all-time high, and it's dipping down. Algorithm just got you in at 174. You're trading at 181. I think you've got 190 as this resistance, quote-unquote, resistance support. But you also have Amazon, okay? If I had to pick one of these 4, Amazon would be the one, okay? Not far behind would be Google, as I think both of those have far better diversified businesses than Uber and Tesla. But again, go and read this one. You can read all about it. I like that one. Now, Bezos needed to pay for his own wedding. And so Bezos sold a shit ton of Amazon at $222. He's going to continue to sell. We saw this at 200, where for almost 6 months, it kept the stock at 200. And that's why I have that 188 in there, that 188 line. That was the support resistance line. You buy under that and you can sell it at 200. We're trading at 222. He's selling a bunch. He just had like a $500 million wedding in Venice. This may be the same type of thing, but it's still a good stock. It's still part of my top 5. I still own this one and I'm not getting rid of it. I like it. Now, another one I like, Meta. Zuckerberg, they discussed de-investing in Llama for competitors. So they discussed going after, OpenAI. They discussed going after Perplexity. They discussed, it's clear. He is focused on AI. He's either going to buy an AI player or he's going to develop it. They have the cash to do both. He's done it before with Instagram, WhatsApp, and Oculus. They will be a major player in AI. I like this stock. I loaded up on this stock when it dipped. When it dips, you load up on this stock. It's founder-led. It's founder-led. And again, the 4-hour algorithm, we talk about TrendSpider all the time. It's up 41% since it triggered a buy. And the MACD is reset. The RSI is at 73. Do you want to buy here? Well, it depends on your outlook. If you're only buying for like a year, you don't want to buy here. You want to wait until it dips and then buy it. But if you think there's going to be a chance, I want to point out to you, 10 years ago, this is the 10-year roadmap, okay? This is Zuckerberg 10 years ago. What do you see on the right? Connectivity, drones, satellite, lasers, terrestrial solutions. Then he has AI, vision, language, reasoning, planning. Then he has VR. They have all of this. They have it all. He's been leading the company through this. So I love Meta. Don't give up on it. It's close to all-time highs. Microsoft. They're partnering with CrowdStrike and Sentinel on cybersecurity. They're getting rid of the blue screen of death from Windows. Okay, I like Microsoft. Microsoft is at an all-time high. It's a $500 stock. It's trading at $497. I don't think I want to buy this one up here, but you may be forced to buy it all. Again, if it's a 5-year buy, maybe you just buy it now. Maybe you take the Bob approach and just buy it. One of the things I've read about chips, Microsoft in-house AI chip effort, it faces hurdles. But the best reasoning on AI has come from customized chips, meaning Google. It has to do with the chips. Apple's using their own chips for their stuff. Google Tensor chips have been trained on their AI, and it's far more efficient with Gemini. Okay, we know OpenAI is starting with their chips, even more so than NVIDIA. So the move to hyperscaler-specific chips is real. And that's why NVIDIA is launching their own data centers. So is NVIDIA a buy? Well, NVIDIA's at all-time highs. Jensen Huang just sold a bunch. Their valuation is still good. So again, I like this one. Their own data centers includes CoreWeave. And we've seen CoreWeave. And somebody asked me this weekend, I forget who, should I buy CoreWeave on the dip? I don't know. The 4-hour algorithm had you in here at $41. Okay, $41. You're up 296% on this one. 290. Let me repeat that. You're up 296%. And by the way, the momentum candles, it has gray. So it says don't buy them. But remember, Amazon is developing their own chips, and they're talking about, I think Credo is the company that's mentioned to be building these. Boy, wouldn't that have been great in the 4-hour algorithm to buy this at 40? I did. April 22nd, because I had the 4-hour algorithm. And I said, this is the top seeking alpha stock for 2025. Now I talk about seeking alpha. Let's talk about it. Because you can get the bundle today on discount, a savings of $160. This comes with Seeking Alpha Premium. And we can go over and we can see Credo, okay? It's a hold now. Wall Street has it as a strong buy, but their price target is 84. Has this one run too much? If you go and look, the 52-week range, the high is 95. It's trading at 94. When do you get out? Well, I'd say if you're trading this one, wait for the 4-hour algorithm to get you out. It makes sense. I am buying and holding this one because this is a top 2025 stock. I don't want to give it up. Now it's trading at 61 times forward earnings, but with their growth going forward, it's trading at less than 1 on the peg, and the peg ratio is key. Okay? I like this. Now, if you don't want to trade chips because 61 times is just too strong for you, there's Taiwan Semi. All of these chips are being made by Taiwan Semi. Okay? Taiwan Semi has the fabs to make these chips. It takes 5 to 10 years to even build a fab. And nobody has the technology that Taiwan Semi does. It's a strong buy in the quant. Now this one is at all-time highs. You're trading at 226. Its all-time high is 228. Wall Street thinks it's worth $226. Maybe you want to go for something like ARM. This one is incredibly expensive as well, but its all-time high is 188. Wall Street thinks it's worth $132. Again, it's rather new. So ARM is one. Another chip company that I really like is AVGO. These are the architecture that chips are built on. And again, $274 is where it's trading. Its 52-week high is $274. You're gapping up. Wall Street thinks it's worth $286. That's a 6% upside. So you're going to have to find this. OpenAI said to have tapped Google for AI chips because, again, I point out self-driving and Google Tensor chips. Choose your chip company. We're in an AI market. And I want to bring you back 18 years ago. 18 years ago, you, as well as me, if you were alive and you were of age, you had the chance to buy an iPhone. And it changed the game. I just want to bring you back there because the story on Apple with the iPhone was nobody's going to buy it because it doesn't have a physical keyboard. You can't buy a phone today with a physical keyboard, but that was the issue. That was the stumbling block. Go and Google Microsoft Steve Ballmer talking about the iPhone. He laughs at it. A $200 phone without a keyboard? Who's buying that? People did. Risk, reward. Who's the Apple stock of today? It's out there. Okay? 18 years from now, somebody's going to be a millionaire by putting $5,000 into a stock today. What is it? It's risk, reward. Okay? That's the point. There is risk reward. And to wrap up the mega cap names that are in my portfolio. Okay? Netflix. This is at $1,300. I trimmed this at $990, right? As it got to $1,000. This weekend, I watched the Poop Cruise, which is fantastic. It's unbelievable. Go and watch the Poop Cruise documentary. And I watched the final season of Squid Games. The stocks in my portfolio, I'm being patient on when to buy back. Again, 4-hour algorithm said buy here at 9:30. I didn't buy at 9:30 because I was holding what I had. Right before its earnings, when it got close to $1,000, I said, I'm trimming half my position. I am just looking and waiting and being patient. Okay, the stock, again, it's in my portfolio, but it's not a full position. A stock that's not in my portfolio, but I want to get into my portfolio because they have streaming is Disney. It's pushed above that $120, okay? The 4-hour algorithm had you in here at 84. That is a phenomenal gain on a quality stock that has used this 121 as resistance before. It's very, very simple. Again, Disney seems to have pushed above 120. Is this one going for the same kind of run that Netflix just went on. Maybe. I want to see that 120 be used as support. We've gotten over it one time before, but I want to see it used as support. And again, remember that momentum indicator that I just added? It's green. So it says buy. When it was in the red, that's when you really wanted to start. Again, buy a good company with good products, good management, and good profit. Now, my favorite Seeking Alpha article is the Catalyst Watch each week. I like it. Okay? I love this one. The quiet period ends on Circle Internet Group. Okay? I expect to continue to fall. I put out a tweet that people who were buying Circle at a certain price were crazy. If you were buying Circle at $282, even though it's green up here, if you were buying this at $282, you're out of your effing mind. Again, to quote Trump, they don't know what the fuck they're doing. That's it. I mean, that's literally it. So, is this one, when the lockup period expires, people are able to sell. You can look at CoreWeave. I mean, we can look at CoreWeave with the IPO. This is a recent one. Look at how it's just taken off. Now it's trading sideways. Okay. Would I be buying up here? I don't have enough information. But one that we do have information on the IPO is Palantir. And you can clearly see it ran up here from $9 to $45. And that was January 2021. It bottomed in January 2023. Just to keep you up on math, that's 2 years. Okay, till it bottomed. And it took another almost 2 years to get back to those highs. But we've soared past that $40 point and we're at 130 right now. So is Circle one of those? I don't know. Catalyst on Monday. Atlanta Federal Reserve Bank President Raphael Bostic will speak on the economic outlook at 10 o'clock. Fed speak. That moves markets. If he says that there's going to be a rate cut, that's going to move markets. Tuesday, expect deliveries of Tesla. I gave you a trade idea around this one in the paid newsletter. Wednesday, Lemonade, 5-year anniversary. If you haven't traded Lemonade, you have not enjoyed this volatility. Okay? This is one that back in the during the 2020 time, I traded this one. Look at that stock chart. Again, IPO'd $68, went all the way up to almost $200 and has fallen. Is now on its way back up. Is this one a good way? It's trading at $43. Again, it's high. $160, somewhere around there. It's still volatile today. In the 4-hour algorithm, does it work? It makes you 89% versus 140% buy and hold. 24 months, 28 positions. Had you in at 34, you're at 44 right now. The last couple of times, it's been a pretty good mover and a pretty big winner. Now, I would say that $62, probably a little resistance point right there. But Thursday, what do you have on Thursday? You got a jobs report. June jobs report is huge because if the jobs report is strong, it further reasons that the Fed will cut rates. But if the jobs report, if again, we get an unemployment rate that goes up, expect Powell to not lower interest rates in July and expect Trump to just be crazy on Twitter and to call him Powell and to make up names. Remember, Trump wants interest rates at 1%. He's also a man who, just say he bankrupted several casinos. 1%, any economist that I know just doesn't like that one. I think it's unrealistic because if you think that rates at 1% are a good idea, remember the inflation we had? That was because rates were low. So if you can't afford things now, just imagine rich people like me being able to afford things and you not being able to. Okay, but you do have a half day on Thursday. So there's not much time to remember that. And then you have off on Friday. So I would argue maybe it's a good time to buy early in the week. Again, Seasonality, first 2 weeks of the month are good. And maybe you want to use Weinstein. Go and Google Weinstein's analysis. Weinstein analysis is a proven way of using trade ideas, okay? You don't need to know it in TrendSpider. There's ARM. There's EMR. There's RRR. These are all, there's Credo. There's MSGE, there's AMD. You can import the stage 2 breakout scanner. Stage 2 means they are getting ready for a breakout. All these names are getting ready for a breakout. Which one will? You don't know. Again, math is on your side. And a trade idea, before we get into the scan, a trade idea for you. A trade idea is taking advantage of this. Regional bank stocks could outperform if these 3 catalysts land. Again, if these 3 catalysts land, I think they will. The first catalyst centers on the Federal Reserve annual stress test. We took that on Friday. It passed. Okay, elsewhere, the June job report set to land on July 3rd serves as another trigger. The final trigger focuses on the 90-day tariff pause. Again, if all of those land, then regional banks could soar. And what's your regional bank triple leveraged ETF? Well, it's DPST, okay? 4-hour algorithm had you in at 77. Today, you're trading at 88. It's an idea. If you think those 3 things are going to do it, this may be the strategy to play it with. And how do you play it? Well, the 4-hour algorithm has a winning percentage, 114% versus 46%. Now, this is not a buy and hold triple leveraged ETF. Just be forewarned. Your average win is 26%. You are close to that right now. But boy, if you had taken this one at 77, you'd be really positive. So again, all of this is in TrendSpider. How do you get TrendSpider? Go to the link tree. It's the first link. Okay, you didn't see me use Seeking Alpha much on this episode, but Seeking Alpha is such a good tool to use with TrendSpider. Again, the perfect Gary bundle. The reason why I bring these up is because these are the tools that I personally use. Now, if you've got tools that work, don't worry about it. But these tools have greatly leveraged me up, okay? And say you don't want the bundle with Premium and Alpha Picks. Again, at the very least, get the 7-day free trial of Seeking Alpha Premium. Why? Because you get this top second half 2025 stock portfolio. It was down 1%. It's buy the dip. Today, it's buy the dip. You can buy the dip on that portfolio. 10 stocks for the second half, and they're outperforming already. So you get the free 7-day trial. That on Linktree is the third link. And say you don't want to do anything, but you want to beat the S&P, but you don't know how to, get Alpha Picks, okay? Alpha Picks is $399 for a limited time. It goes up to $499 after this sale. But get it today. This is a very simple portfolio. Super simple. 2 stocks a month. They tell you on the 1st and the 15th which stocks to buy. They tell you exactly the stock to buy. And sometimes you can scalp it and make up to 10% if it's a super small cap. They alert you when to sell. It's a rules-based portfolio. Okay, the stock pick covers multiple sectors. You get access to the entire portfolio on day 1. The performance to date, okay, 162%. You can see it on your screen versus the S&P at 157%. I think it's even better than that, to be honest with you, but I can't show it on screen because it gives you access to the actual portfolio, and they yell at me when I do that. So if you have any questions, again, Linktree is the central area. Remember, subscribe to the newsletter and you get entry to win TrendSpider, a year of the advanced. You'll get 52 training sessions. So all you have to do is subscribe to the newsletter. There's no entry. You don't have to pay for it. It's free. Just be subscribed on July 4th and you'll get it. Go and follow TrendSpider on YouTube and Twitter. See if you like it. And if you do like what you're seeing, Test it out for 14 days at $7. But don't wait, because by the time you're done with those 14 days, this sale is over. So if you like it and you find that you enjoy it, sign up for the annual plan and get my 4-hour algorithm. Now, I just scanned in the 4-hour algorithm stocks that are bullish. One stock that's bullish, but I probably wouldn't touch until you see some movement, is Cleveland Cliffs. It's in the core portfolio. Another stock that just triggered at 174 is Google. Another stock that, again, I don't think you should buy. It's in the core portfolio, but I don't like the way it's acting. But it does seem to be holding up along that support line sideways all the way since May, is Pepsi. Now, from the watch list, BROS. This is Dutch Brothers. Dutch Brothers has a buy in here at 69. Do you want to buy this one? Well, it's kind of like the IPO stuff. If we're just trading sideways and it goes up, you can go and look at the valuation in Seeking Alpha. Let's see. The quant says it's a hold. The valuation, it's a bit stretched. You can analyze it with AI. Pull up an AI. Well, their competitors, Starbucks, Dunkin', and McDonald's. And you can see the valuation stretched. The growth, fantastic. Revenue growth year over year, 30%. Profitability, EBITDA margin of 17%. It outlines it. This is like having an analyst in your back pocket with this. They bring up the positive and negative. So again, you can even look at Wall Street. Wall Street says it's a buy. They think it's a $78 stock. That's a 12% upside. Another one that I like that just is on the watch list that I really, really like is Fresh, FRSH. Okay, just got you in at 1482. I saw the CEO on CNBC one day, and I said, "Ooh, this one looks good." Well, it's a strong buy in the quant. When has it moved to a strong buy in the quant? It moved to a strong buy in the quant. Let's see, back here at 1470, it's trading at $15.02. It's a strong buy. What does Wall Street think that is worth? $19. That's 31% upside. What does the chart look like to me? Well, they have earnings coming up later in July 29th. MACD kind of hovering around. Looks like it's just kind of staying here. Doesn't look like it's moving. So let's go to a longer term chart. Well, again, the IPO came. It got beaten down. Looks like maybe it's a good opportunity. Maybe you want to start trading it. But on the weekly, look at this. Remember, those candles, green, red, gray, it's gray. Doesn't mean to buy yet. When it turns green, maybe I'll buy it. But I like that one. Another one that just had an entry in the 4-hour algorithm that I love is a Nebius Group. This is like a core weave, but not at the valuation. But it has moved in 79 days since the 4-hour algorithm said to get in. You've made 149%, rounded up to 150. This one wins 50% of the time. 8 months, because it's an IPO, 8 months, 6 positions. Okay, Nebius Group, let's go and look at it. NBIS is the thing. Wall Street says it's worth 66. That's 26% upside. Now, Wall Street is a strong buy, but the quant has it as a hold. Why? And it's been on a hold since 22. So let's go and look. Why does it say? Well, it's the profitability. And the profitability metrics are concerning with a net income margin of minus 272, far below the sector. It costs money for data centers. That's the key. Growth challenges with a year-over-year revenue growth of down 98%. It's below the sector. Again, I think it just changes because it's 8 months. This is an AI thing, and it's just looking at it. And if you don't like this one, go and check out CoreWeave, go and check out AWS or Google Cloud. Again, these are the tools that I use to look at this. Now, I will include this entire list of stocks that are bullish in the 4-hour algorithm on the newsletter. So it's another reason to subscribe to the newsletter. Again, the 3 tools that I bring up are the newsletter, which is free, or you can pay for it. TrendSpider, which is on sale for 50% off. And then Alpha Picks and Seeking Alpha Premium, which again, you can save up to $160 on. And if you just want the Seeking Alpha Premium, you get a free 7-day trial. There is no reason not to get it. So if you have any questions, hit me up. Go to Linktree. My email address is right there. But if you subscribe to the newsletter, you can just reply. Reply in the newsletter. I'll reply back to you. But again, if you have any questions, hit me up. Okay, see you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.